In this video, we look at the new rules for contracting out R&D activities. It's very important to understand these new rules, because they determine which company has the right to claim UK R&D tax expenditure credits in situations where the R&D activity is being contracted out to a third party. The key principle behind these changes is to ensure that the company deciding to undertake R&D receives the R&D incentives. Thus, the costs of contracting out R&D by a customer to a contractor can attract relief for the customer. But the legislation also makes it clear that where the customer is not contracting out R&D, for example, because the contract is for a product or service which is not R&D, the contractor can claim the relief for any qualifying R&D it undertakes. The new rules come into force for all R&D claims for accounting periods starting on or after April 1, 2024. Since contracts are established well in advance of filing R&D claims, familiarizing yourself with these changes is critical. Doing so will help you mitigate any potential negative impacts and enable you to maximize the benefits from your future R&D claims. The term contracted out is specifically used rather than talking about subcontracting, as contracted out is the term used in the relevant legislation. This principle represents a change from the previous rules for small and medium enterprise R&D claims, where the SME claimant could normally include a portion of its contracted out R&D in its claims. Under the new rules, which company has the right to make the R&D claim will depend on the nature and intention of the contract. This means that companies will need to be clear on the rules at the point of entering into a contract. It also makes it essential that written contracts are put in place. One positive outcome from the new rules is that there is no longer a prohibition on SMEs claiming for funded or subsidized R&D activity. Now let's look in a bit more detail at how it is determined which company has the right to claim the R&D incentives. The new rules give the right to claim contracted out R&D to the customer, i.e. the company issuing the contract, provided that it is reasonable to assume that the customer intended or contemplated that R&D would be done. The guidelines clarify that contemplated means that the customer has more than just a mere awareness that R&D will take place. The customer must therefore 1. Have a substantial intention that R&D will be undertaken. 2. Have a specific appreciation of what R&D will be done. 3. Have the ability to understand and specify the R&D. The customer's R&D intention might be reflected in a contract just for the R&D, or a part of the R&D, or a wider commercial contract that includes the R&D. If the customer did not contemplate that R&D would take place, for example, because the contract is to deliver a product or service which is not R&D, then the contractor has the right to claim the R&D incentive on any R&D it undertook to deliver the contract. There are 3 conditions that must all be met for R&D to be considered contracted out. 1. There must be a contract in place. 2. In meeting the obligations of the contract, R&D must be undertaken. 3. It is reasonable to assume that the customer intended or contemplated that R&D would be undertaken as part of the contract obligations. In order for the customer to show that it contemplated the need for R&D, the R&D must be specified somewhere. This can be in the contract, in discussions leading to the contract, or in the customer's internal documents and records. The R&D specification does not necessarily have to be shared with the contractor. To show that it intended or contemplated that R&D is needed, the customer must be able to demonstrate 2 main things. 1. Capability in understanding and articulating the nature of the R&D. This means that the customer will need to either have in-house technical capability or a source of technical capability drawn from elsewhere. 2. An understanding of the nature of the R&D that is to be undertaken. This means being able to state what the advance in science or technology is, and what the associated uncertainties are that necessitate R&D. This goes beyond just listing project challenges and constraints. What are the takeaways from this? The main points to take away are that, when deciding whether or not to contract out your R&D, you need to assess your eligibility to claim any associated R&D tax incentives. And if you believe the eligibility to claim rests with your company, you need to maintain strong evidence to support your opinion. Likewise, when looking to take on contracted-out activities, you need to consider your eligibility to claim any R&D incentives for R&D undertaken in delivering the contract. In some cases, this will need to be discussed at the outset, so that both parties are clear on where the rights to make an R&D claim lie. Thanks for watching. If you found this video useful, please like and subscribe.